Yo guys, Matt here with UMB. Who wants to learn a scalping strategy so simple that even your 8-year-old could figure it out and make you money with it? I know I certainly would, so here it goes. This is something at UMB that us analysts use all the time. Lots of our members use the same strategy all the time, and it's something that we preach and you'll hear us talk about a lot, especially in our live trading sessions. You'll see you will find a lot of content for it in the file section on our Facebook group. Also, a lot of detail in the file section on our Discord group, amongst a lot of other strategies that we use. This one is just so simple. I mean, anybody could figure it out. So I'm going to break it down for you pretty quickly here. I'm using as an example SCWO, but I can literally pull up any chart that had some momentum and some running on a day and teach you guys how to use it. So this is called what we like to call the 5-8-13 EMA strategy, or you will hear me refer to as just the 5 EMA break strategy. Anyway, it is a good one. It is a quick one. It occurs all day long on many stocks, and it can be used a lot. It is a strategy that, generally speaking, you're going to take a position and probably exit relatively quickly within a minute, 5 minutes, whatever that move might be. But it is wonderful to learn and keep in your toolbox, if nothing else. So here's how it goes. For those of you that are very new, that don't understand even what an EMA is, it is a moving average line. It's essentially an equation of the average movement on a ticker in a particular time frame, right? So the way you're going to get these, you got to have these lines on your chart. These are your EMAs. So the way you're going to do that is open up your broker and figure out where your indicators are, right? So for Robinhood, it's up here in the right-hand corner. You click on indicators, you go to add indicator. You will see EMA as one of the top ones. You will add 3 EMAs. Now, by default, your broker will probably add them at something like 21, 50, 100, and 150, and 200 EMA. So don't worry about how it adds them. Get 3 of them on your chart, and then what you're going to do is come over here to where your indicator stack is, and you should see a little gear icon to where you can go into settings, and you can change the length of that EMA. So if it popped up as a 21 EMA in your chart, you're going to change it to 5, right? You're going to go to your next EMA, you're going to change it to 8. Your next one, 13. 5, 8, 13. That is the EMA stack that you want to be using for this strategy, and really for a lot of the strategies that we preach with this momentum kind of fast scalping trading that we engage in a lot. So once you have those on your screen, I also plot the VWAP here. That's always there. That's this blue line here. Let's just kind of hop right into it. So again, this thing is so easy. Anybody can use it, right? So what you're going to look for is essentially a pullback to where the stock fell underneath your EMAs, right? Once it's underneath your EMAs, now you have something to watch for. What are we watching for? We want it to break back above the EMAs. It's literally that simple, guys, right? So take this for an example, right? We're kind of riding along here, like just not a lot of volume going on, but it's like chugging along, with an upward trend line here. And we get a little spike here right out of the gate, and then we get a spike down, boom, and it falls considerably below our EMA. So this could have been a position to watch for. So as soon as it fell under, excuse me, next candle opens, doesn't quite get over our EMAs. The next one opens, it definitely gets over our EMAs. So what you want to do is make sure, the key to this strategy is to make sure that you allow a 1-minute candle to actually close above your 5-minute EMA. Once you see that close on that 1-minute candle, it's essentially signaling an entry. Now, I always wait a few more seconds after that. I let the next candle open to make sure it's not just going to slam down and fall out of the EMAs and it doesn't work. But that is essentially a position that you could take. So if you were watching right here, this one closed. It didn't quite get above our 5-minute EMA. The next one closed. It definitely did. You could have taken a position here. Now, as you can see, it wouldn't have been a huge move, but you could have had a position here, right, and rode this up to, somewhere in here. You could have, you could have really just kind of held this thing because it just moved sideways for me, I'm a fast scalper, so I would have taken that move, and if I saw red coming in with a little pullback, I probably cut and I find a new position. That's the way I trade. Regardless, this could have been a move here. Let's say you didn't. Let's say you never actually cut. It moved sideways. You're still in that original position, and bam, look what happens. I mean, that's a nice move from here to there, right? Probably a good 15-20% move. So. You took your exit up here as soon as we started to get a red candle and a pullback, right? It dances around, it comes along, it's not really doing much as far as the 5 EMA strategy is concerned. And then look what happens here. Boom, it falls off right below your EMAs. Okay, great. That's what you wanted, right? We're looking for it to get below the EMAs so that we can then watch for it to break back above. That's the whole strategy. It's that simple. So, okay, great. It fell below. We have a potential entry, right? So, a candle up, candle up, candle up into the EMAs. Okay, here it comes, guys, right? What are we waiting for? We need this candle to close above the EMAs, right? So, this one did not do it. This one just barely did it. That would not have signaled for me an entry. I would have waited for it to get into this next candle here. Now, some of you, I'm sorry. There's a chance that I would have waited for this full candle to close because really it was the first full candle to close above. But that's not what the strategy is. The strategy is let the body of a candle close above your 5 EMA and take your position. And be ready to cut if it falls back below your EMAs. You may lose $1 or $2, but the upside potential is usually much larger than what you're going to cut. So let's say this would have been a position here, and you would have had this whole ride up in here. We had a little pullback. You may have cut up here. Once we got into this pullback, you may have just decided to hold. If you held, that's great. I mean, look at the size of that move we got from here to here. Another 15-20% move. I mean, you had these two moves occur, right? These two trades happen. This is the 1 minute chart, so we got about 20-25 minutes between each one. But I would say in less than an hour, you took two 15-20% scalps using the 5 EMA strategy. I mean, that can quickly add up. So, let's just keep going down the line here, right? So it falls back down. It tries to come back up. It doesn't make it. It's dancing below the EMAs. We get some spikes up. It doesn't make it. It falls off even more. This fall off here resulted, we got a little green hammer candle signaling a potential reversal. It comes back up into the EMAs. It dances around. It kind of falls off again, and then boom, we got our first one to close over. So your position would have been right there. So we'll put a box around that guy. You took that position. We got a nice spike up right out of the gate. I mean, got to be 10, 12, 15% there, a little pullback, and then boom, look at that, all the way to the top. I mean, that right there, we're going to measure that for you just to show you, what kind of move you would have gotten off that one. I probably would have exited somewhere in here with all this choppiness. I just wouldn't have liked it. I would have repositioned. But for those of you, I mean, that first move was a 10% move. This move all the way to the top's almost 20%. I mean, that is just, that's awesome, right? So this is what we call the 5-8 EMA strategy. I mean, it works everywhere. Look at this giant candle here, right? We were in some chop, sideways consolidation. Not a bad sign. It never actually lost the EMAs. So this would have been a different position. Like you really wouldn't have played the 5 EMA break here because we were already broken a lot. It just kind of moved sideways all through here, right? We fell below, we got above, we fell below. Like it was just kind of moving sideways. So the strategy I would have been looking for here, I would have actually had a line on this chart, not to get into another strategy, but I would have had a line showing clear resistance right here, right? From 1, 2, 3, 4, 5 wicks, right? So that line would have been there. I would have been watching this consolidation, and I would have been saying, hey, we need a break of 716 or whatever this line is here in order to take a position. So I would have got that break there. It would have pulled back. It would have jumped back above, and I would have entered somewhere right in here and gotten that, that nice leg up here. So let's pull up another one. Let me just quickly, just so I can show you how easy and how versatile this thing is. I'll just go to some random alert from our alert system. We'll just look back on Friday here. Let's see. Let's just go to BITF. Let's see what that looks like on Friday. So BITF, and we'll pull that up. All right, BITF. So what I'm seeing right out of the gate is a lot of algo action, this back and forth little choppiness. Not really what we want to see for volume, but as we get over here, we got some volume for sure. So, all right, so let's start back here, right? So we were chopping around back here. We fell down. I'm not liking how wiki this chart is, but that's neither here nor there. For the purposes of this video, I'm just going to show you how it would work again, right? So we fell off here. We got below our EMAs. We tried to come back up. It rejected and came back down, but it made a lower low. Then it came back up. Your position would have been right here, right? So, boom, right out of the gate. I mean, you can identify these things so easily, right? You would have taken that position and got that nice ride up. So from there, you know, it fell off and it just chopped around in your EMAs. Like, you really couldn't play this 5 break EMA strategy like anywhere in here. You know, right in here, it fell off and it got below our EMA, so you would have been waiting for that break. This guy here might have faked you out a little bit. This is a perfect example, right? Because we got above and we closed, so if you took a position, you would have got stopped out. But immediately, the idea here is, like, if you took your position here, which anybody using this strategy would have done, including myself, this next one, you know, would have opened it, dance around, and then this next one opened and, you know, and came down. My stop is always going to be just below my EMA there. So if it fails to hold the EMAs, I'm out because I'll just take a new position. So I would have lost a couple dollars here. Fine, no big deal. The same thing happened here, actually, right? We got a close, and then what happened? It wasn't strong enough. It just pulled back. But you know, as we go through these, you can see, like, this particular ticker may not be the best one just because it's so choppy and so wiki, but you could see all through here, like, you could have taken a position here for a 5 EMA break for sure. Kind of choppy. It didn't go very far, but I would have been holding, and then boom, I got that leg up here. Maybe I would have cut, but maybe I would have held through this chop, and then boom, got that leg up there, and you're looking at probably a 10% move there. So, and look at this guy down here, right? So we got a big move in here. So again, your EMA would have your signal would have shown up right in this area, and you would have kind of chopped around. And you would have, you know, you would have gotten a nice little move there. This would have been a difficult play because of how choppy it is, but you can see how it still would have worked. You would have taken that same play in here somewhere, and you would have caught this whole move up. So, again, guys, this is the 5-8-13 strategy. We use it all the time. It's literally, or it can literally, sometimes feel like printing free money. I mean, it's pretty basic. It is not bulletproof. You can lose using this strategy. I want to be very, very clear. You have to have discipline, and you have to know what you're looking for. So if you see that candle break over your EMA, that signals a position. Go ahead, take your position, but be ready to cut if it loses your EMAs or wherever your stop loss might be. Maybe you have a big tolerance and you could set a stop loss all the way down here somewhere. That's fine. For me, I don't care. I'll just get out very quickly with a small red, and I'll reposition if I was wrong. If I was wrong to get out, I'll get back in. If I was wrong and it goes way red, I'll just wait for the next break. So that's how this thing works. If you guys enjoyed this video, let me know. I am happy to make as many of these as possible. I'm happy to break this down again on another stock. I am happy to talk with anybody one-on-one in more detail on this. And again, in our Facebook group, there's a lot of notes on this strategy in the file section, and the Discord has an endless amount of notes on this strategy and a lot of other ones. So get in the comments. Let me know if you like this video, and let me know if there's any other video on strategies or anything else that I can make for you guys.